So, Brian, I thought that to be as tax efficient as possible, I was supposed to roll over as much of my traditional retirement savings as possible into a Roth account. But CNBC says that's not always true. Why is tax planning so flippin' complicated? And how are we supposed to figure out how to make it work for us?
I mean, tax planning is confusing. I mean, if you have ever done your own tax, you ever done your own taxes before? I know your mom does them. No. Your mommy does them for you.
Mommy does them for me. I just talked to her last night. I was
Did
like,
you?
Mommy, I've got all my tax stuff together.
Mama, can you file my W-2 for me?
No, I'm sure she takes care of you. No, that's good that she's hopefully educating you so you can take it over eventually because she's not gonna do it forever, right? So, but the taxes are confusing, and it's not that hard when you're working for an employer. Like I used to work. It's been a long time, but when I had a regular job and I worked for an employer 20 plus years ago, it was pretty simple, you know. Back then, I think we were itemizing because the standard deduction was a lot lower. So I had to keep track of medical expenses. And of course, with little kids, we had a lot of medical expenses.
Mm-hmm.
But that wasn't that hard. You know, you ran through TurboTax. This is when the computer was on dial-up, you know, and you hit the button and I would actually walk away, go get a cup of coffee and come back. And
let it connect.
Yeah, there's the page, you know, it flowed to the next page. But it took a long time because the internet connection was slow.
Yeah.
But it wasn't that hard. But there was no tax planning. That's called tax preparation, right? And so when you get into retirement, there's the way things are taxed is so different. You know, like somebody goes, yeah, I'm going to pay a ton of tax on this property. I had a guy just call me. He's like, Brian, I need a tax plan really bad. Oh, okay. Well, we'll help you out. Just give us their information. And, you can give all the information to Lynn and Megan and we'll come up with a plan and I'll sit down with you. And I went through our 7 areas that we focus on. One of them is tax planning. And he had a big capital gain. It was like a $500,000 capital gain. I was like, well, yeah, that's pretty big. Yeah, you're going to owe a lot when you sell that building. That's going to hurt
20%.
you. 20%. But I need your tax return. He's like, yeah, but I kind of figure it's 20% tax. But, they're going to, I'm going to owe $100,000. Like I said, I need your tax return.
Yeah.
Or we can't have another meeting. So get your tax return, bring it to us, and we'll copy it. We'll do a review. We do a meeting review every single week, and we look at what's going on. He goes, well, why do you need the tax return? Why can't you just tell me that it's going to be $100,000? Because it depends on your tax bracket.
Yeah.
Depends on what your income's going to be. And I need to know what your projected income is this year. If when it's sold this year, I need to know about your complete tax return. We had one client give us 4 pages. Well, his real tax return is 76 pages. I said, this is useless. It's useless. We can't help you. I can't give you good advice. So anyways, back to the 500,000 guy, right? He had 500,000 capital gains in his building. So he thought he was going to have to pay $100,000. Went through his tax return when he finally brought it in. We did it at our investment meeting. I looked at our CPA, said, look at this loss carryover that he's got. It's $650,000 of a lost carryover. Do you know what that is? No. So basically, he had lost a lot of money on another property long time ago.
So they could kind of write that off.
Right. So he's only writing $3,000 off a year, right? But when you have a large gain, it helps absorb. It's like a big sponge. It just soaks it up, right? But he didn't know that. His CPA didn't know that, or didn't know what he was doing.
It's also the cost basis. It's the percentage of the return of the profit, right?
Well, so his total capital gain was going to be $500,000, right? So, but he had this large net loss carryover, meaning he had lost a lot of money from a prior investment. Of course, he didn't tell me about that part. He's like, I always make money in real estate. Well, it looks like you didn't at one point. He had, whoops. Everybody has a loser once in a while, right? And I said, there is no tax. What do you mean? How is that possible? Because it's going to absorb it. So tax planning isn't necessarily about some crazy strategy that you got to come up with that costs thousands of dollars from attorneys and financial planners. It's just paying attention to the details, right? It's just taking a look at what you have, what's going on. And all of that analysis between looking at his investments, we probably had 7 or 8 hours in it once we looked at everything and said, this is great. You're walking away with this money tax-free. He was about to do a 1031 exchange. He didn't need to. A 1031 was going to cost him thousands of dollars. Going to have to find a garbage property because there's nothing available right now.
Yeah.
He was going to dump it into something that he didn't really want to buy. And I said, and thankfully he called and said, I need some analysis. I need help because, my CPA is not really involved. He just does the taxes. He hired someone that was really cheap, $300 a year to file the taxes, just to do the return, but he didn't actually have a plan.
Yeah.
Right.
It's so darn complex.
Yeah, it is.
Let the professionals deal with it. Don't take that on yourself. Integrity Financial Planning is happy to help. Here's the number to call: 866-2-PLAN-4, 866-TO, plan and the number 4. You can find us online at retirementplannow.com.